Hello and welcome to Retirement Wealth Academy. I'm your host, Erin Kennedy. Thanks for being with us. This show is dedicated to helping retirees and pre-retirees sort through complicated questions and topics regarding their own retirement. And today's guest, we have April Reed Cruz. April, it's so good to see you.
Thank you for having me.
Yeah, so April's with Reed Financial, and I know that you are known for helping people solve complex financial problems. So the question I wanted to ask you today is one that I feel like a lot of retirees have. It's the myth of retiring in a lower tax bracket. We think we're going to be in a lower tax bracket when we retire, but that's not often the case.
It really isn't. And when we think about it, there are three primary ways that funds can be taxed. They're either tax deferred, taxable, or tax free. And most of us are taught our entire working life to defer as many taxes as possible into the future. So everyone piles all that money into the 401k, maybe additionally into IRAs for some extra deductions, and all of those taxes are being deferred to the future. So we have to plan not only for income for ourselves in retirement, but also for Uncle Sam getting a good piece of that as well, sometimes both federal and state taxes.
Right. And you brought up such an important word, and that is future. Right, and so we have to ask ourselves, do we think taxes are going to go up in the future?
Well, right now it's inevitable unless something changes. The current tax code is going to sunset at the end of 2025, which would effectively increase taxes for just about everybody. So we've got to plan for the fact that if nothing changes with current legislation, we know taxes are going to go up in the very near future.
And have you seen the debt lately?
Exactly.
We know the government has to get that revenue from somewhere.
Has to come from somewhere.
So then what tax planning and strategies are you recommending somebody consider today in regards to their tax situation for the future?
Looking at making sure that everything isn't all in one bucket, that we're diversifying well with the different tax strategies, that we're accounting for where taxes are now and where they're likely to be in the future, and making sure that there's enough saved not only for what that net income need is going to be that you have to live off of, but also for what you're going to have to pay in those taxes. So looking at some of those other strategies now, while maybe some short-term pain of paying a little bit of a higher tax rate now, to think more about the future as well and have some tax-free income sources for the future. So making sure all those buckets are filled.
Right, and I know that you and Reed Financial are known for advanced tax strategies. So I wanted to ask, what then is different between planning for taxes pre-retirement versus in retirement?
Well, pre-retirement, your goal is to save as much for the future as you can, and to keep your income taxes as low as possible. So in some ways you want your income taxes as low as possible, but when you're retired, you're no longer contributing. So you don't have that type of compound growth with contributions that are going to help offset those taxes. When you start thinking about that distribution phase, again, you've got to think about your taxes and the distribution that you need, which can be, in a lot of cases, 21% or more between federal and state, additional that you have to save just to pay those taxes. So it's a little bit of a reverse from that standpoint, and really having to think about the withholding that is really kind of more automatic when you're in your working years.
Boy, you know, I really appreciate talking this through with you. It's so much more complicated than stocking money away in your 401k. This has been incredibly helpful. April, thank you so much for your time today.
Thank you, Erin.